Hey everybody, thanks for tuning in. Tonight we are going to be talking a little bit about how Trump's tax plan affects you. I'm joined tonight by CPA Steven Stern. Steve, thanks for coming with us. We want to talk tonight a little bit about the tax code because Trump has been pretty clear that he wants to make changes. And there's some confusion. We've been getting a lot of questions about it, and there's some confusion about how it personally affects our clients. Let's talk about a little bit about where things currently stand and sort of some of the changes that we're hearing about. The biggest thing is that he's proposing that we simplify the code so that there are 3 tax brackets rather than 7. And those 3 would be 12%, 25%, and 33%. And it's confusing for most people to sort of understand what that actually means. So why don't you tell me a little bit about what does it mean to the average person if there is a simplification of the tax brackets?
Well, for me, when you talk about simplifying the tax brackets, it makes it easier to plan. It makes it easier to estimate what your tax situation is going to look like. Right now, the way it looks, just by consolidating the rates and going to 3 brackets instead of 7 brackets, it's not yet easy to say how it will affect certain people. Mm-hmm. Everybody's situation is different, and in terms of the tax brackets, when they give the dollar amounts that each bracket applies to, they're talking about taxable income, which is after all of your deductions, your mortgage interest, things like that. So everybody's situation is different. Gotcha. So just because 2 people have a similar household income, or 2 families have a similar household income, that doesn't mean that they fall into the same tax brackets, because their taxable income might be different. Gotcha. So it's difficult to say what it will mean to each person. Everybody's situation is going to be different, but the simplification itself is just going to make it easier to start planning and projecting things out on a year-to-year basis.
I mean, most people want to know, hey, am I going to get some money back, or am I going to pay less taxes? What do we think? Is that
the plan is supposed to reduce taxes by, and this doesn't mean reduce your rate by 35%, but hypothetically, if your taxes were $100, they're saying on average your taxes under the new plan would be $65. So you'd save $35 on those taxes from one year to the next if nothing changed. That does not apply across the board. It's going to be different for every person. I think across the board, though, we're going to see savings on the taxes. I don't think right now it looks like anybody's situation will get worse.
Now, does it seem like significant savings or just some marginal savings? Or
it may be marginal for some people. What it seems like is that the people who are currently receiving big benefits from the tax code, who have a lot of itemized deductions, things like that, it actually seems like that it'll be marginal for people like that. What it seems to be more focused on is families, lower to middle income households with children, because there's some benefits that are going to be provided to those households that aren't currently available. And it seems like the people who don't itemize, who don't deduct charitable contributions, who don't own a home, things like that, seems like the benefit will be greater for those people.
Okay. Now, I know that there's also a big question, particularly people who hit the AMT. Now, the history of it was supposed to be, a tax on the wealthier people in the country, and it never, that limit never sort of kicked up.
Yes.
And so a lot of people who, particularly around here in the New York metropolitan area, that $250,000 at which it starts triggering it.
It could trigger at different levels.
At different levels. Okay.
Yeah, but really what the AMT does is it eliminates certain deductions for certain people, depending on your income. So people who have even a slightly lower income could still hit the AMT if they have certain situations going on. Under this plan, what it sounds like is that the AMT is eliminated for simplification purposes because it does get very complicated.
So to make it clear, what Trump is proposing is to completely eliminate the AMT.
Correct.
Which I've spoken to some people who have gotten very excited, who hit the AMT and saying, okay, now this is eliminated. How does this is great.
Right.
I'm going to save a bunch of money. But when we look deeper, that might not be the case, correct?
Right. The AMT, people thinking that are just seeing AMT eliminated. That could be $5, $10, $15, $20,000 in a lot of cases, and that's a common amount for a lot of our taxpayers. They think that's just going to be a straight savings.
Uh-huh.
All they're doing with that plan by eliminating the AMT, from what I understand, they're also eliminating the deductions that are being added back and assessed the tax anyway.
Okay.
So when they can't eliminate those, when they can't deduct those items anyway, that means their tax will be about the same as it would be if they assess the AMT. It's just that the AMT itself gets very complicated.
Right,
and
right,
there's other things outside of just eliminating deductions that are subject to AMT that are very complicated and can hurt other taxpayers.
And so, like we were talking about before, the elimination of the AMT for people who are, their incomes are trigger the AMT, the excitement was, oh wow, now it's going to save me a bunch of money. But really, what's happening with the code is just it's simplifying it. But the tax situation, your tax burden might remain the same.
Correct.
Because some of the deductions that you are going to be are not going to be allowed. Is that correct?
Correct.
Okay, so you're not going to be allowed to take
It's
those
the
deductions.
same concept. The AMT is calculating a tax on deductions that they're saying they're not allowing because of your income level.
Right.
Because it's essentially a recalculation of your taxes as if you didn't have those deductions.
Gotcha.
So if you don't have those deductions to begin with, there's no need to recalculate.
Great. Now, hopefully this makes sense to everybody that's there. Thank you all for being there. If you have any questions while we're talking, just feel free to type them there. We'll try and we'll get back to you. And Renee, hello. Thank you for tuning in. But we just covered change 1. Okay, we're going to cover 3 changes today. That was change 1, and that's sort of the big one, right? That's the one that everybody
that's what everybody sees.
Sees and is talking about. But it's complicated, and it doesn't mean necessarily what you might think it means. And the theme here is like you're gonna have to talk to your accountant, your CPA.
And remember, this has not passed anything yet.
And
this still needs to pass Congress. There's going to be changes made to the plan. Certain aspects are going to be, I guarantee certain aspects are going to be integrated. There is going to be a plan to try to reduce the tax code and try to make it a little simpler. It probably will save taxes for most people, but a lot of what you're reading, have been a lot of proposals and nothing has passed yet. And we don't even know if everything will kick in for 2017. They may be scaled for budgeting purpose and things like that.
And that's another thing to keep in mind while we're talking is that this has no bearing on this coming April.
Correct.
So don't think even though Trump becomes president January 1st, that now all of a sudden these things go into effect. It's going to take some time, and this is really, we're talking about these changes will affect the 2017 calendar.
Possibly.
Potentially, maybe even 18, depending on how long it takes to get through. So that's change number 1. Change number 2 that I want to talk about, which was another thing that was interesting in it, was the 3.8% Affordable Care Act tax, right? So the proposal is to eliminate that. Can you, for I guess taxpayers above for a joint household of $400,000?
For about $400,000.
So there's some of you out there that this affects. So just explain what that tax is, and if it gets eliminated, what does that mean for the person who is affected by
what the tax? It was just an additional tax on higher income taxpayers. It was to help fund the Affordable Care Act. There was that tax. There was also a 0.9% additional Medicare tax, which was also instituted with the Affordable Care Act. They haven't been around for very long. They really only affected higher income taxpayers.
Okay. So define a higher income taxpayer.
Like I said, if households joint returns of 400 or more generally saw this affect them. So it's not an enormous tax that we're talking about, but it was an additional tax that just kicked in. I don't remember if it was 2 or 3 years ago that was a surprise to a lot of people because for us at least, we have a lot of clients in the tri-state area. It's a much higher cost of living around here. A lot of people don't consider themselves wealthy. And they thought that's, well, why am I getting this additional tax? I'm not wealthy. So
it's on a national level.
Yeah, so it's on a national level. It's a good thing to note, though, is that some of the aspects, I won't go into detail, but some of the new potential proposals for Trump's plan actually were taking into account statewide costs.
Okay.
So it's the first time I've seen that they actually scaled certain limits for deductions and things like that based upon what the average cost is for your state.
Gotcha.
We see it where people get hurt in certain areas because it costs a lot more to live here. Childcare, for example, is one of the things that gets scaled for your potential allowable deduction. Childcare might cost more in some states and some areas than other areas, so it actually does give someone in a more expensive state a little bit more of a break.
Now, you mentioned childcare. Talk a little bit about that because we were chatting a little before about that there might be some potential deductions that weren't available before with that. Can you sort of talk about that?
Right now, you have your two options. If your job offers it, you can have your dependent care account.
Sure.
It's up to $5,000 per household, no matter how many kids you have, and that's taken directly off of your income as a deduction. Anything in excess of that, that's it. There's nothing more than that. Or vice versa, you can potentially get a credit towards your taxes. Again, it's not a significant amount when you take into account how much child care costs these days. So, and there's a cap. There's only so much you can deduct. There's only so much you can get as a credit. The new proposals would give a much higher potential deduction, and this is whether or not you have this opportunity at work. To have a dependent care account that comes out of your salary pre-tax, you would, above the line they call it. So right off the top of your income, you would get a deduction for up to 4 children. It also applies potentially to elder care. So it's not just dependent children up to age 13. And it seems like they expanded what the cost can apply to, including tuition. Now, I don't know if when it states tuition, it means preschool, which is currently allowed. But it may include some private school, charter school tuitions or something like that.
So there's some,
but we don't know that for sure. So that's a significant deduction for a lot of people. And that, they said, the caps would be based upon the average cost per state. So each state would actually have a potential different deduction.
So there are some good changes coming. There are some things that seem like they're, that they could be fantastic changes, but when we look at the numbers, they're really, it's just sort of shifting things around to make it a little bit simpler for the, the tax code a little bit simpler for planning purposes.
The biggest thing I actually saw for the typical taxpayer is that the standard deduction, so the joint standard deduction is potentially going to go up to $30,000. That's a significant increase.
So who do you think will benefit the most from these changes? What income level?
Let's just say couples that don't own a home who aren't above. I think a lot of the caps they've been using have been $225,000. So if your household is under $225,000 of taxable income, or it might be AGI, I'm not sure what limit they're using. It seems like those benefits will apply to you the most.
And then the second tier, who else do you think it might help?
On the flip side, there are significant reductions to the top income tax rates.
So
right now you have a top tax rate of 39.6%. That's coming down to 33%. That could be a significant savings for a wealthier individual. And that's anything over $225,000 now is going to be at 33%. Whereas it's at that 400 levels when you hit the 39.6%. And so anything over 400, people who have a lot of income, very wealthy, that's a significant savings.
So that is a good amount.
It seems like there's going to be savings across the board, but you can't deny there's some significant savings there for upper taxpayers.
So I mean, really, what we got to take away from this is that there are going to be some changes. It's not going to affect everybody as dramatically. There's a very good chance you'll see some savings.
Things should be less complicated.
Things will be less complicated, which is a good thing. And the takeaway, I told you we're gonna talk about 3 changes. I kind of lumped 2 together. So the first change, just to review this, was the change in the tax brackets, right? The second change actually is it proposed sort of the I'm drawing a blank here, the AMT. So we talked about the AMT and how that gets affected, and how some of the deductions get brought back, that you're just not allowed to take. And then the third thing was the 3.8% affordable.
You can really lump the AMT and
Together.
the Affordable Care Act taxes together. That they usually affect the same people. I'd say the third thing that we discussed is that there would be a major change potentially to the standard deduction.
Okay.
So that would affect essentially anybody who doesn't own a home, because when you don't own a home, you don't have that base of deductions of mortgage interest and things like that. So that's a significant change. And then the child and the elder care stuff is a significant change. I mean, that just child care is expensive.
Absolutely. So the takeaway here is these things are sort of changing. With change, you might need to make some adjustments to how you are planning for your taxes. So for the next couple of years, I would say it's really good to meet with somebody like Steve, your CPA, your accountant, whomever it is, to sort of talk about these things as they develop and how they can affect you, and how you can benefit from.
It's really a case by case basis.
It's going to be case by case.
Everybody's situation is going to be different. It's never good to share your story with other taxpayers and think that your situation should be exactly the same as theirs, because everybody's situation is different. There's a lot of variables.
Yeah, absolutely. That's the key takeaway, is everybody's situation is different, and you should definitely talk to somebody about your situation to get a good handle on what's right for you.
Seems like most people will see a benefit from this, though.
Great. Well, thanks, Steve. Thanks for coming. If you're there, thumbs up. Give Steve show Steve some love.
I want some hearts.
Thumbs up. Hearts, yes, hearts are even better. And better yet, if you like this, if you found this was helpful, please share this video. It's always good for us to know, what kind of content to bring to you. I know this was a long video, but there's a lot to talk about. So for
there's a lot more we didn't cover,
and there's a lot more that we didn't cover. For those of you sticking around, thank you so much. And if you're watching on the replay, feel free to ask questions below. Send us a message. Oh, we got some hearts and thumbs up.
Sweet.
Oh, thank you, everybody. And we will come back. And as things develop, we'll bring Steve back. If everybody wants, we'll bring him back to kind of fill us in and try to make sense of what's happening with the tax code. So thanks again, Steve. Thanks, guys, for tuning in. See you next time.